Hi, I'm Jennifer with Tax TV, here with some basic information about the taxation of real estate investment trusts, or REITs, and its shareholders. REITs generally fall into three categories: equity, mortgage, and hybrid. Most are equity REITs, which typically own and operate income-producing real estate. Mortgage REITs, on the other hand, provide money to real estate owners and operators either directly in the form of mortgages or other types of real estate loans, or indirectly through the acquisition of mortgage-backed securities. Hybrids are a mix of equity and mortgage REITs. The basic requirements of the REITs are: it must have a centralized management, transferable shares, be beneficially owned by at least 100 persons, and 50% of the trust is not owned, directly or indirectly, by 5 or fewer individuals. If it were not a REIT, it would be a domestic corporation, and it must not be a financial institution or insurance company. The REIT must have a calendar year, tax year, and make an election to be a REIT. Lastly, it must satisfy the income and assets tests and the distribution of earning and profit requirements. The income requirement ensures that the REIT receives primarily passive real estate income. It's required that at least 75% of the gross income is generated from rents, interest from secured loans, gain from sales, or other specified sources. In addition, at least 95% of the gross income must be from sources specified in the 75% test, plus income from interest, dividends, and gains from the sale of stock or securities. Failure to satisfy these tests will result in the loss of REIT status. For the distribution requirements, each year the REIT must distribute an amount that equals or exceeds 90% of the REIT taxable income, excluding net capital gain, plus 90% of net income from foreclosure property less the tax imposed, minus any excess non-cash income. A REIT may be subject to tax on the following amounts: undistributed REIT taxable income, undistributed net capital gain, income from foreclosure property, and other specified income. Shareholders of REITs will be taxed on any dividends to the extent of the REIT's earnings and profits. Any dividends of capital gains are taxable as long-term capital gain for the shareholder, regardless of the holding period. For more information about the taxation of REITs, search taxtv.com.